Hello traders, Day Trader Matt here of businesswithtrading.com, and today I wanted to highlight a swing trade that I've been in since the beginning of January. It is in soybeans, which is definitely one of my favorite markets to trade, and I would say it's right behind the ES for my favorite market to trade. I've just always loved the soybeans market. So I wanted to talk about this trade because we were able to get into it, and hindsight obviously is always 20/20, and our entry was spot on. A lot of times that happens, not always. Sometimes our entries are horrible and price keeps going and we just get stopped out. In this case, it actually looks fantastic. But it is what it is. It comes through a lot of research. Obviously you spend way more time researching the trade, and then once you're already have the research in place, you know exactly where you want to enter. And what I do is I put in my entry order and my stop goes in right away. So that way when I enter, I automatically have my stop, and just in case if price were to keep going, I would get stopped out. I'm okay with the stop. This is a 10-point stop, by the way. Soybeans, it is $50 per point per contract. So if you're trading one contract, you're talking $50 per point, same as the ES. And that's one of the reasons why I like it, but I just love the market. Soybeans seems like just such a fun market to trade. I knew a futures trader, and she used to talk about how soybeans were made the world go around. Soybeans, people had to eat to live, and so many things are made out of soybeans, and I thought that was pretty cool. But I enjoyed trading it before that, but that's just something cool story I thought. So we entered at 946, so our stop became 936. I was very comfortable with that stop because if price did come down, I would expect it to break this low and keep coming down, and that would change everything that I was actually seeing with my research. So I was very comfortable with that. So a 10-point stop, you're talking $500 risk per contract, and I can live with that. Now I'm looking for price to come up into this region. That's why you have these two red lines here. 1100 would be nice. We'll see if that actually does happen. And just to give you an idea, if price actually does get to 1100, then our $500 of risk per contract. So we're just going to do one contract to keep it simple here, keep the math simple. So $500 we risked to get into the trade. Price did come up, came down, and then it finally shot up real heavy. This yellow line is really just there for the video. I don't have this on during my real-time charting, my analysis, any of that. It's just there for the video. I thought it would be cool, and there is no reason why it's yellow versus red. I like the color yellow. It is what it is. So if price actually does get to 1100, we would make $7,700 per contract with a $500 risk. Let me draw this out. So what are you doing? My pen's not really working very well. Alright, let's do this again. We risked $500. My writing has gotten much worse apparently. So price is going up. If it gets into this region here, we will have made $7,700 per contract, and this is $500 per contract, which is actually very, very good. At current levels, 1060, you're talking 1060 minus our entry times 50, you're talking $5,700 per contract. $5,700 is not bad at all. So we'll take right here $5,700 per contract, which is not bad. our $500 risk is negligible. Basically, right now we're making 11.4 times our risk, which is phenomenal. And those are the trades that we actually want. You know, I had a talk with a gentleman a few days ago, and we were talking about swing trading versus day trading, and I was sharing my experiences about, you know, what I look for. You know, do I prefer swing trading or day trading? And really, I fell in love with day trading first. I did make some swing trades with stocks a long time ago. This is early 2000, late 90s. And after that, I fell in love with futures trading, the ES in particular. So, and I really love trading the ES. I still do. I make swing trades on it. I make day trades on it. I love it. But swing trading is a little bit of a different animal. You know, day trading, you have to make faster decisions and you have to be more precise. Swing trading, you don't necessarily have to be more precise. You know, this is obviously a bad example because we were very precise on this entry. You know, and I try to be precise on all of my entries, and I do that because I want to keep my risk nominal. You know, I could have entered up here at 955 or something, which that would have guaranteed I would have been in this trade. At 946, I was not guaranteed to be in this trade. So hopefully that starts to make sense. I'm not guaranteed to be in the trade, but if I do get in the trade, I'm getting a phenomenal entry. And I'm okay with that. There have been several times, I'm sure I have video out there, where I put in an entry, a limit order to enter the market, but I never got filled. I never got triggered. You know, a day goes by, 2 days go by, I never get triggered, and then the market starts to change. I pull my order, and it is what it is. It happens, and you have to be comfortable with that. You know, there's some people out there that they're not comfortable missing a trade. You know, they're like, oh, I missed this trade, and they see it the same as losing money, and it's totally not. You know, it's very, very far from it, because when you lose money, it gives you a totally different mindset than when you just missed a trade altogether. For me, it doesn't matter, because when I hit trades like this, like, that's just phenomenal. $5,700 per contract. At, you know, we're a little bit above that, but I took 1060 just to make the math easier for the video, and for myself as well, because I'm talking, trying to do math at the same time. You know, it is what it is. Don't make fun of me, guys. But, you know, trades like this, you don't have to have a lot of them. Say if you had 6 trades like this in a year, would you be very happy? Some of you probably would be, some of you probably not. You know, it depends on how your trading is right now. But at this moment, I want you to focus on this, 11.4 times our risk. This means if you made this trade once, you can make 11 other trades and get stopped out with the same stop and still be slightly ahead, assuming you took it off right now, this trade. You know, that's phenomenal. You know, that's what really builds accounts, is being able to make your 11.4 to 1 reward to risk, and then being able to take your time in the market, and you don't necessarily have to be correct all the time. You know, I know traders who are profitable 30% of the time. 30% of their trades make money, but because they keep risk to a minimum, they actually make a very good living. You know, and I make money a lot more than that. You know, I'm shooting around 60, 80% as my goal, and that's where I'm around. You know, some weeks are 40, some weeks are 90, and some weeks are 60 to 70. And that's 60 to 70 is my sweet spot. That's where I want to be at. You know, a lot of people will tell you different things. It is what it is. That's how I trade. But anyway, hopefully this trade, this setup here that I'm showing you, and I'm expecting price to come up here, you know, but hopefully this opens your eyes a little bit and shows you what is possible. One thing I forgot to touch on, when I did enter here, price started to move up. I moved my stop slightly above break even, so that way if price did actually roll over, I'd be okay, because I was aiming for a much larger target. You know, I was looking for 1,000 plus, but as price has moved up, it has changed the target a little bit. Now I'm looking for even more. You know, and we did take the May contract. I don't think it says it up here. It says it up here. All right, we are in the May contract. It is March 1st right now. So I may or may not roll this. I think the price is going to end up coming up. That'll allow me to get out, and then on the pullback, I'll be able to enter another month. And that's one thing that I do, something for another video, obviously. But that's one thing that I do. I try to time my trades so they go up, I can get out, and then on the pullback, I can get in again with more time for that contract. That's one thing that I look at, because I don't like rolling positions, you know, because it doesn't really make you any money. So if I can get out and then on a pullback get in with more time, that's actually what I'm looking for. So anyway, hopefully this video you got something out of it. Feel free to leave comments below if you have any questions, comments, suggestions. I'm open to everything. So please leave comments below the video. Again, if you'd rather email me, that's fine. support@abusinesswithtrading.com. You know, I'm just here trying to relay information. So however you want to contact me is cool with me. You know, Day Trader Matt on Twitter. If you'd rather go that way, that's fine as well. I don't know how many people use Twitter nowadays. I actually like it, but that's a topic for another day. Hopefully you guys have an awesome rest of your trading week. Awesome rest of your day. I'll see you back here in the markets. Thank you.